Hello, fellow traders. Tis I, the Rumpled One, coming to you on Monday, February the 20th, the year's 2023. Let's talk trading. Trading with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. And just so you know, it's President's Day or MLK Day, depending, I guess, on which state you live in the US of A. And right now, we're on a day where the banks are taking a holiday. So you might be wondering, why in the heck would we be trading on a day like today? Well, there's opportunities every day. Isn't that right, Walmal?
Yep, there's opportunities, and unfortunately, I'm in one right now that's gone against me, and I had a pretty good day, and I've kind of busted that up pretty bad. That's okay, because there'll be other opportunities come along, and we just have to go and deal with it. As long as you don't go and hit your outer limits, cause yourself problems that way, you should be okay, or at least I should be okay.
Right, and right now we are in the launch pad, and it's been having a tough time launching. If you, I can change here. If you look at M30, you can see we have a high, a 3-ball high right there. And it looks like it's putting in one of those W or M patterns. In this case, it's a W pattern here, head and shoulders.
Yep, I see that.
And it looks like it, we might want to come down and break that neckline. But we're also putting in higher highs and higher lows if you look at the 3 balls here. And I'm looking at the M30 chart right now.
Yep, that's certainly what it's doing right now. Oh man, what am I gonna do? I'm in a mess right now. It's just part of trading, and I haven't hit any of my limits, so I'm okay. But I went short in it, and I should have gotten out, had the opportunity to get out, break even twice, and I didn't take it because I was so sure that it was going to come down. And that's, we talked last week about making mistakes and whatever. It was a mistake, I guess. But at the same time, you know what? It still can come back, and and I can be okay. And as long as I'm still in the trade, and as long as I'm not violating any rules, that's okay. So that's where I'm at.
What entry did you, was that a flip-flop entry you took, or dots, or what?
It was a flip flop entry that just didn't work out for me. And what happened was, it was the third dot on a flip flop, and it was too much. Where the mistake, I guess, on the original entry was that it had already run its course for a day like today. And I think that's something to talk about a little bit. Is on a day like today where we only have a 42 pip range. It's a holiday. It's just not a day where you're going to run more than that. And and I should have known better. But hey, it is what it is. And we'll just see. Hopefully, I can get out of this mess. I only need to go and come back down 2 pips, so it's not like I got to move 20 pips or something. But the problem is, it's got to move to 2 pips, and if it doesn't go my direction, then I just get out, and take the loss for the day, and move on.
Right. And right now, I'm getting some short signals. We've got the 3 ball here. We've got one from 171 minutes ago. We crossed below that line. We just put in a 3 ball here up at 42. We just broke through the 2 pip trailing entry off of that 3 ball. We've got the indicator 2 dots. We just had a magenta dot, and the current dot's magenta. We're sitting right on top of it. So right now, all indications are price will most likely go down.
Right. And we're in this range. We're at the top of the range. So as long as it doesn't break the top of the range, I'm in pretty good shape. But the thing is, it's trading. You don't know what it's going to do. You never know what it's going to do, and so you just take your chances.
Yeah.
And hold on one second, boys and girls, I need to go and get out of this trade. Almost. Just it missed it by by literally missed it by about 2 points because my TP is set there.
Right.
But that's part of trading. It really aggravates you, but you know,
Yeah.
you can't do anything about it.
I know.
But in any case, that like I said, it's just part of trading, and you take your wins, you take your losses, and you move on. And if you don't look at it that way, trading's not for you.
Yeah. And the thing is, I'm really starting to think that when people learn trading, the first thing they should learn is money management. Um, because, there's just so many entries out there. So many
Right.
entry methods and this, that, and the other, and none of it matters once you put the once you put the trade on. It all gets down to money management on the plus side and risk management on the downside, which I guess you could call it money management. Risk is part of it, but I usually like to separate the two.
Right. I keep them the same, and I
Hey,
pull
there,
them out.
you're,
There we go. Thank you
yeah.
very much. The trading gods smiled upon me today. And like you said, you could have gone the other way. And I usually don't get all that excited about it, even when I take a win, because I know that it could just, I made some money there. I could have just as easily lost some money there, and that's the thing that, if anything, if any traders get anything from my agony just now, and it's just simply this: I had my trade report up. I think it's Zero trade report or whatever, and I've got multiple instances up on the screen. I'm able to see how much winning or losing on any particular trade, and I've got another instance so I can see where I am for the week, which is not that important, especially today's first day of the week, but also for where I'm at for the day. And that's the most important thing. I didn't violate my day. I didn't violate my trade. And it worked out for me this time. And getting back to what you were saying, Euro, about money management, that's what matters. It just comes down to managing the money and making sure that you're not violating what your limits are. And I know we had talked about maybe doing a series on setting up a trading plan. And I think I said to you, or if I didn't, I meant to say to you that, well, when you're setting this up, we need to first of all figure out, teaching folks how to go and do a trading plan. The first place you start is figure out what you're willing to risk, how much money you're willing to risk, and then figuring out the next step is figuring out what your money management is going to be in that, on the positive side and on the negative side, and from there, then we can go and start looking at, potentially what psychological limits you have. In other words, if there are certain things that that you can't do, for instance, that if you lose more than 2 trades in a row or three trades in a row, it wreaks havoc with your brain. Figure those things out. Get all that stuff written down. Then we can go and talk about method. And unfortunately, I think with most traders, they do it backwards. The first thing they figure out is a method. And, I don't want to say that it's not important. It is very important, the method. But in terms of a trading plan, I think it's the last thing you should put on the paper. All those other things need to go on paper first.
Yeah, and the reason being is that that's like the one leg that can change. You know,
Absolutely.
you can switch methods, whether you're doing horizontal lines, squiggly lines, statistics, fibs, whatever. But your money management and risk management should not change.
No. Now it may go and be modified slightly because let's face it, if I'm changing my method from a thing where I'm scalping to something where I'm doing more of a swing trade, well, yeah, then your risk may change because on a scalp trade you may want to go and potentially risk more or risk less depending on how you're looking at it. But at the same time, you hit the nail on the head there, sir. The thing is, for the most part, what you're willing to lose, especially what you're willing to lose for the day or what you're willing to lose for the week, that's something that, it's not just written down on a piece of paper and a pencil, certainly not even maybe with a pen. Probably it's something you got to go and bring a tablet in from outside, bring in a big stone and chisel it.
Well, the thing is about the risk, I mean, if it's a dollar amount, that could change as your account size grows huge, or if somehow it gets halved. But
Right.
but then again, if it's a percentage, that's something you might only want to change once a week, once a month. I know some people that like the compound, they talk about it. They're doing it almost on the fly, which I even think I sent you that one white paper or something on on that money management that was on the fly. But like you said,
Right.
for you, you like to keep things simple, keep it the same. That way you don't have to rethink it. You can just focus on your entries and exits.
Exactly. I mean, if I'm sitting there spending half my brain cells on trying to figure out how much I'm willing to risk on this particular trade, and think about it, if let's say you got a method that's more complex than mine. Let's say you have a method that you're doing. Let's say you're, following these guys who like to go and trade support and resistance zones. Okay, and so what happens is, where do these guys put their stop? Let's say if they were going long, they go and put their stop on the other side of support by a couple of pips. So that means they got to figure out, okay, where is price right now? Okay, how far away is price from that area that I'm willing to get out of? Okay, that's how many pips I'm allowed to run. Now I'm willing to go and lose X percent for the day. Change that to dollars, divide that by the pips. Okay, now I know how much I'm willing to go and take the trade for. You know what? There are guys that can go and do that. For me, that's just an awful lot of work. you know,
Yeah, yeah.
before you do anything.
Did you
And
just take that trade out of the flip
I
flop
did
box?
not.
Okay,
I did not, because it's first dot. You know, I
okay.
probably should have. Actually, let me go and talk about that for a second before we go back to the other topic. The reason why I said you probably should have taken that trade is this: we're in a day right now where we are ranging small. We only have 42 pips range on the day. Okay, it's a holiday. I mean, could this take off later on? Maybe, but most likely, if you would ask me, if I was a betting man, and asked me where I thought what the range would be for the day, I'd say it's going to be somewhere between 42 and 50, or 55 or something like that. It may expand it on one end or the other, but not by much. We're in a day where price is just not moving. It's a holiday. The London boys are going home in about an hour and a half. So then they're the only people that are trading on the pound dollar right now. The U.S. bankers, they're all gone. So the only people who are trading are London guys right now and retailers. And most of the retailers, they're working today, because even though today is a banking holiday, most of the retailers are probably still at work, doing their day job, being a dentist or a doctor or a lawyer or whatever they are. So you don't even have that input coming in. So you've got a very muted market right now. So what happens is you get moves like we just saw coming out of that flip flop box, and I'm more willing to take a first dot trade on a day like today, because that's the only move that you're going to see. Okay, so here we got the second dot that came up on that flip flop, and we've already gone negative. Now we got a brand new flip flop box, and so that's the type of day that today is. And then the third reason why I would have taken that trade there is because look this entire hour, and actually going back almost 20 minutes into the previous hour, and we're in a pretty tight range right now, where we're ranging from roughly 33, 34 to a high of I don't know, looks like
42.
42 on mine.
Yeah.
Yeah, so you only got a 10 pip range there. So if you wait for a third dot, the problem is, yeah, and this one may make me a liar, but that's okay. But the reality is that you're more than likely just not going to get it, because it's probably going to come up here, hit 42. There's a high probability it's going to turn right back down and go, even though we're in the launch pad, your favorite place to go long, the high probability is it's going to hit 42 and come right back down to the 32 area again.
Yeah.
Because it's just the type of day it is.
Yeah, even on a slow day like today, the fastest 15 minutes in trading is just about up. So, fellow traders, I hope you picked up a tip there, because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One. over and out.